Gold is more than a hedge against inflation. It is an asset that has been artificially suppressed by the banks and the global elite for decades. But the prices of these recession-proof assets could actually be ready to skyrocket as the ultra-powerful bears lose their grip. I'm going to break down what these shifts in global power structures mean for 2023 and what you can do to prepare and profit big from it. If that doesn't just scream, I want to watch this video, then I don't know what will. As for me, I can easily recognize profit potential, and that is why so many people keep coming back to this channel to see what opportunities my brain is finding out there in the market. But before I deliver my latest opportunity that I'm absolutely obsessed with, I've got to get you to follow through on your side of the deal, which is make sure that you smash that like button, make sure you hit subscribe, boom, bang on that notification bell, comment anything that you want in the relevant sections. I appreciate it. Now, let's get into why gold and silver is so bullish in this bearish market. Gold is not just a recession-proof asset providing protection as bears pummel bulls into 2023. In fact, I am quickly growing in the belief that gold and silver will actually become some of the standard and most hottest FOMO assets in 2023. Don't know what FOMO is? It's fear of missing out. And in the previous episode of this series on gold and silver, I showed you the history of precious metals, who extracts them from the earth, and who currently has all the gold. And spoiler alert, it's not me. Now that you are closer to being a precious metals expert, I want to show you how the global elite have been manipulating gold prices for a very specific and nefarious reason. But first, let me ask you one simple question. Would you buy an asset if you knew that the biggest banks in the world were betting against it? Most people would probably say no. Well, what if on top of that, I told you that when those banks bet against that asset, hundreds of the world's largest hedge funds are also betting against that asset? Well, what I've just described is the current reality of the world's gold markets. There are three main players in this operation. First, you have the large US banks like JP Morgan and Citibank, who have a rich history of their employees committing potential market manipulation. Then you have the US monetary policy community. These guys influence and operate a worn-out American institution known as the Federal Reserve. And no, it is not actually a federal entity. The Federal Reserve is a private-owned entity. And if you've been subscribed to my channel for long enough, then you will be very familiar with the Fed and their mission to maintain the dollar's world reserve status. And the third major player of this operation is just all the people and institutions around the world who are going to be made a fool by the Fed and the big banks. These guys have invested their own funds and their clients' funds into gold with the anticipation of appreciation of those investments over time. Instead, gold price collapsed to about $1,900, 45% in September of 2011, all the way down to $1,050 in January of 2016. Gold investors during that time lost nearly half of their investment. Not a good day at the office. Now, only in early of 2020 did those gold prices actually finally recover to those previous highs back in 2011 before that massive plummet to the low in 2016. But since then, the price of gold has been basically trading sideways. And all throughout this time, JP Morgan was running a kind of market manipulation called spoofing from their trading desks. Now, this particular type of manipulation is actually illegal and fundamentally involves a desk submitting large amounts of orders. These orders are submitted outside of the ask/bid spread without any intention for those orders to actually execute. Now, why does this matter? Because this actually results in a sudden and off-balanced shift in the order books across exchanges and ultimately creates a distorted picture of the market's supply and demand for an underlying asset. This one being the silver and gold markets. And when the market becomes distorted enough in either direction, a real order is then placed by the same desk or in coordination with another desk that takes advantage of the sudden distortion by either selling the asset into a strong rush of buying or buying the asset from a herd of panic sellers. The role of the Federal Reserve in this operation is to simply look the other way in the case of the gold markets. The bank's incentive to run the manipulation operation is simple. The banks just want to buy lower and sell higher. That's when they profit. The Federal Reserve's incentive is a little bit less obvious, but the reason that the Fed does not mind all that manipulation in the gold markets goes back to the fact that the gold used to be the world's primary means of exchange and currency. The dollar and, to a lesser extent, other fiat currencies now serve as the global means of exchange. Put simply, the Fed's dollar flipped gold, and now the Fed is just letting the banks play offense to keep it that way. And while this cursed gold scheme has not collapsed the price of gold entirely, it has caused many to lose faith in gold's ability to ascend higher than $2,073 per ounce. Meanwhile, the precious metals clearinghouse for options and futures, known as COMEX, also sits idly by and does nothing, even though its exchanges very clearly responsible for most metals derivatives trade volume in the entire world. For as long as the banks are allowed to operate this suppression operation, gold prices will stay pinned to or below that $2,000 resistance. Pretty dismal, huh? But wait, this is a series on buying and holding gold and silver. Yes, it is. And I can understand why at this point you might find gold to be a very unattractive asset, because I have just laid out the case for it to never be able to move to the upside in any meaningful way, potentially. But that's where this whole gold scheme gets whacked over the head with an absolute brick. You see, there's a rising group of nations around the world that have grown tired of the supremacy of the US dollar and have now become nearly powerful enough to end that. Those nations are Brazil, Russia, India, China, and South Africa, the BRICS nations. These countries have, at the best, neutral relations with the US and its allies, but countries like China and Russia actually have the means and the motive to bring the US and the US dollar to its knees when the time is right. But ever since the end of World War II, when nuclear bombs became an option, nations and their armies can't just attack a country, whoever has, because most of them have nukes. But the pursuit of ambition has remained strong in the world despite the use of most classical styles of military force being taken off of the table. This reality has pushed war into old battlegrounds like trade, but it has also led to the weaponization of new technologies like the internet and data centers. In the next episode of the series, I will show you guys the cunning new weapon that the BRICS nations are building to attack an American center of power with. And I promise, you do not want to miss this. But that is all for this episode. Let me know what you think in the comment sections. And if you like content like this, make sure you show up to the next series and make sure you go watch my BRICS Nation series that I did a few months ago. And obviously make sure that you smash that like button. Make sure you hit subscribe, boom, bang on that notification bell. Comment anything that you want in the relevant sections. I appreciate it. Thank you so much for showing up to this video. I will see you in the next one. Have a good day, everyone.